In this video, traders, we're going to look at how the index weighting can affect the trade you make in the index futures, or CFDs, or spreadbet. Stay tuned. Hey guys, warm welcome to you. All right, so Dow, super popular market, trading, if you're trading the futures, well, I am. If you're spread betting or CFD trading, super popular, US 30, etc. So it's popular because it moves nicely, it's easy to trade, it's easy to understand, and you can correlate it with other markets, right? You can look at the NASDAQ, you can look at the S&P 500, the Russell, even go so far as to see how Europe's performed to make your decisions. But one thing you've got to bear in mind is that the weighting of the index you're trading, in this example we're going to talk about the Dow, but any other index, and it's very prominent in the Dow because of the way it's weighted, you've got to be mindful that, and we tend to forget, that actually the index is made up of constituents, that the value of each one of those constituents actually makes up the index. So for the Dow, it's 30 stocks, and each price of those has a little impact on the actual price of the Dow. And we kind of tend to forget that sometimes as traders. But with the Dow specifically, you've got this situation where Boeing is, I've rounded these a little bit, guys. Boeing is 9%. In other words, that has a 9% weight on the index, the biggest weighting on the index. Then you've got United Health, and you've got Apple. So these three have a big percentage weight on the index. Now, why am I saying this? Because literally the other day Boeing came out and these guys had a real problem with their planes, the Max, the 737 Max, I think it was. Well, regardless, it doesn't matter what the news was. The point is, this stock had been decimated and it was getting hammered intraday, and it was just completely unusual and not normal for these big stocks. And so because it had almost 10% weighting, 9% weighting on the Dow, you had this situation where the S&P was up kind of 0.1%, a tenth of a percent, and the NASDAQ similar, and the Dow was down. And you've got the patterns completely different, because normally situation would be, if you've got the market doing this, that's the S&P 500, your Dow is probably going to be looking reasonably similar. It might be slightly out of sync, but it's going to look reasonably similar. But it had this situation where this was the S&P 500 and the Dow was just completely out of tune. Now, be warned, because if you use something like this and you're looking at the whole picture to trade the Dow, all of a sudden you're going, why is the Dow trading in completely different manner to the rest of the indices? I've got my S&P 500 doing this, I've got my NASDAQ outperforming a little bit, I've got all the stuff that I watch doing the same type of thing, never in complete sync, but the same type of thing, and then the market you trade, and you might normally use these things as a guidance, is completely out of sync. And it's because of this, guys. There's a couple of times a year where we get a big constituent that has a bigger weighting in an index, whether you're trading FTSE 100, whether you're trading Dow, whatever it is, it's having an adverse impact or an unusual impact, it could be the other way around, on the index. So it always pays to double check and be aware. You have to be aware of all of them. Like if you're trading, other indices, you don't have to be aware of every little kind of weighting, but stuff that's got a big weighting, just be aware. And it might be worth just adding a little checklist before you start trading to say, hey, is there any news out? Because it's always news that kind of drives these big moves. We're not interested if one's kind of moving up, a little bit higher than the others. That's just normal relative strength or relative weakness, and that's part of the course. But if there's news that's really skewing this, like it's down 5% or 6%, that's going to have a massive impact. And you can actually go back, and there's sites out there where you can calculate how much percentage has effect on how many points. So like 5% has X amount of points movement on the Dow. So you can actually see what happens if you strip that out. But that's just for kind of curiosity purposes. The point is, from a trader's perspective, if you're not aware of this, you're kind of saying, well, what's going on? And you get confused. So back to the point, it's worth having a checklist and say, hey, any big news out that's impacting my heavily weighted stocks a lot? If it is, I need to make an allowance for it. And you're either going to say, okay, you know what, maybe I don't trade it today because it's so much basically based on this, and it's basically just going wherever this goes because of the weighting of it and the way it's moving, or I trade something else, like maybe I could trade the S&P 500 or trade the NASDAQ 100, etc. Or I stand off for a little bit, or I accept that and I just change the way that I process information and make my decisions. So normally you might go, well, I'm looking at all the broader indices, I'm looking at where the money's flowing, but in actual fact, what I probably really need to be doing is looking at the chart of BA and seeing how that's performing. If that's flagging at lows, then perhaps buying the Dow just because the others are drifting up isn't the best course of action, because that's the one that's ruling the price of the Dow at the moment, not the general flow of money throughout the whole indices. So that's just something to be aware of, guys. Be aware of how the index weighting affects your trades, especially if you kind of get so used to trading this stuff in and out, because this is very rare, it doesn't happen a lot. And when it does happen, it just upsets everything and kind of think, what's going on? So it might just be worth having a quick checklist, few minutes it takes you, just to make sure that the highest weighting in your index that you trade, again, go and Google it, go and look and see what the weighting is. Just take the few highest and just to see if there's any major news on those, because if it is, it can affect the patterns and stuff that you normally trade intraday. If there's nothing, carry on, do your normal analysis, pre-flight checklists, pre-trade checklists, whatever you call them, and carry on regardless. But just having that is like an extra layer of protection, something to be careful of. And I'll see you in the next one, guys. Take care. Bye bye.